Hi, everyone. You're watching episode 63 of Yield TV. Hey, welcome back for a second episode of Yield TV today. So it's Thursday, January 21st, 2021, and we're going to get to dig in with Kinjal Shah, who is an investor at Blockchain Capital. She recently wrote a year in review at the end of 2020, and she's thankfully going to walk us through all the insights that she had in crypto, but specifically also in DeFi. And yeah, we're just really grateful to have you on. So Kinjal, welcome to Yield TV. How are you doing?
Thanks for having me. Doing really well. Glad to be here today.
Absolutely. What part of the world are you based in?
I am actually on the East Coast of the States right now, usually based in SF.
Good OPSEC there. That's what you're, yeah, that's, I never understand when people are like, I live in Des Moines, Iowa at XYZ address. I'm like, what are you doing? Like, keep it more general. Anyways, Kinjal, let's start with your background before we dig into all the great insights you have to share. So how did you get into the blockchain space, and then how did you end up at Blockchain Capital?
Yeah, definitely. So I joined Blockchain Capital in 2018. So it's been almost 3 years. And prior to this, I was actually working at Fidelity Investments. And so at Fidelity, I was fortunate to spend some time working on consulting projects, but towards the end of my sort of stay there, I worked on the early blockchain strategy projects that they had. So that's kind of where I got involved in the space. There's a really big Fidelity contingent out there of folks who love Bitcoin and love the space. And so it was there that I kind of fell in love with the space. I think, after working on it, I felt like this was the future of finance. And, I wanted to be working in the future rather than on some of my, existing projects. And so I really fell in love with the space. And I actually met Blockchain Capital when I was on vacation. So I was on vacation in San Francisco with a friend.
That's cool.
And yeah, and I got connected to Spencer Bogart, who's a partner here at Blockchain Capital, and we just really hit it off. And yeah, the rest was history. So I've been here ever since.
Yeah, really, really cool. Can you talk about maybe like some of the projects that you've invested in or worked with over the last few years?
Yeah, definitely. So, so Blockchain Capital, we have invested in over 100 projects in the space. So definitely, far ranging in terms of more traditional financial infrastructure and services. And then also in the past couple of years, been investing in DeFi, data platforms, some of the others. So in the past few years, I've worked alongside UMA, Upshot. If you guys have, recently seen the launch of the Upshot project. Block Native has another infrastructure player that we're really excited about, and that we've led their latest round of financing, as well as a number of the DeFi projects out there.
Very cool. Yeah, we had Matt Cutler from Block Native on a while ago, and he is just the most entertaining person to listen to. So many like interesting stories from the mempool to tell. So Kinjal, we could jump right into your report if you don't mind. Like, I feel like it'll kind of like set some context for more of the conversation. But part of the reason I wanted to do this is just that so much has happened over the last year in DeFi. So much has happened in crypto. I mean, just, you look at the end of the day, like the Bitcoin price obviously gets a lot of attention in the media, and with how correlated the markets are, there's a lot to unpack there. So yeah, like, would you be comfortable, like, if I start to pull up the report and then we can sort of talk through it?
Yeah, absolutely. And happy to share my screen. Yep, there we go.
Excellent. There we go. Yeah, just fire away. I'll let you know if we have any trouble seeing anything.
All right. So yeah, so this is kind of like the high level breakdown of the report. Is there any particular area you want to jump into, or should I just start going through it?
Let's do this. Right, as I look through the report, the stuff that really like caught my eye were these these first few slides on Bitcoin and then Ethereum and DeFi and stable coins. And then later on, I don't know, I can't remember if there's anything in the report, but I know you've talked to me before about on-chain non-custodial options too. So maybe we could touch on some of your insights there. But yeah, maybe at the macro level, like how do you summarize some of the trends of 2020? Like, I think a lot of people that have lived through the last bull and bear market, everyone has PTSD from that and starts to ask, like, are we in another bubble? Like, what's going on? Is it different this time? Is it the pandemic that's driving the price up, the failure of society and hedging against that? So anyways.
Yeah, no, totally. I mean, the way that I contextualize everything that's happened in the past year is really that two big things kind of changed in the world. So the first is that from a monetary perspective, we've seen, crazy levels of money printing, things that we've just never seen in the world before, and is not expected to stop anytime soon. And that, of course, calls to the attention that inflation feels impending and, much higher risk. The dollar has definitely been a little wobbly. And so I think we've heard that call from macro investors over the past couple of months coming out and saying, hey, like, we're actually really worried here. And so I think that's like the biggest thing is, what do we think the impact of the printing that we do today is going to have over the next 10, 15 years? And I'm not a macro specialist, but I can definitely see that this is going to have some long standing impacts on interest rates, on the dollar and the strength of the dollar, and then also just how the economy kind of, the real economy kind of, persists over the next few years. So I would say this is probably the biggest trend that we really felt and saw from a macro perspective, and that, obviously impacts Bitcoin and sort of matures the environment for, investing in Bitcoin and making that, position from a institutional investor perspective. So I think that's the first piece. And then the second piece is this acceleration of being online. So we were already online, and now we're even more online. Everybody spends like 10 hours a day on their computer, and we rely on digital platforms to do pretty much everything, including socializing. And we've seen in the past few weeks with Parler and with Trump being sort of deplatformed, there are some crazy consequences to what the big social platforms can do. And so on one hand, we have all this money printing, and then on the other hand, we have this reliance upon the big, tech giants getting even bigger and more reliant upon them. And so together, I think the story around Bitcoin just becomes incredibly strong, just when you think through these two trends and what the future could look like. Bitcoin and decentralized platforms just make more sense.
Yeah. I guess, do you all talk about, like, is it the conditions of the of the world right now, the macro conditions of the world, or like, is it the same story of, I mean, those that are in Bitcoin, that are in the crypto community, are very dedicated and call it conviction, call it cult-like. I mean, I'm as guilty as anyone of this. Is it just, taking what's the narrative and saying this is good for Bitcoin again? Or do you really feel like is this the sort of macro conditions that, like, Satoshi, I guess was like foreseen, like with the creation of Bitcoin?
I'm not sure this is exactly what Satoshi envisioned. I think that's going to be, a mystery for us all. And I saw this, this kind of quote somewhere. I think it might have been from Nick Carter's like most recent article, but he said, it's not Bitcoin that changes. Bitcoin is Bitcoin, and it has been Bitcoin, but the world around us has really shifted. So it feels sudden, but it's really been a long time coming, and we're only at the beginning of the macro shift. But I do believe that this is more about the global climate, just from macro conditions, social, political, all of it is kind of coming together at once.
Yeah, that forced transition to being digital first for many of us too that's a remarkable change that we I used to order from Amazon for groceries on rare occasion. Now we do it all the time. We're able to shop locally. It's not that we have to anymore. But once we made that shift, and given the I think like some of the fears we had, of course, of getting COVID and like trying to like quarantine at home with like our kids, suddenly there was a shift of, okay, we're going to work from home, we're going to order from home, we're going to live from home, and suddenly digital living became like my primary. And I feel like there's no greater construct to digital living than a cryptocurrency. So yeah, I think like when I was looking through the report, I'm like, yeah, I mean we're just affirming like and reminding everyone this is why you're all at home. You're all at home, and you're much more dependent on digital first living. But Kinjal, sorry, let's we can move on to the next part of this. Yeah, sorry, there we go.
Yeah, absolutely. So yeah, I think a big, it's obviously a conversation that everybody's having right now, which is this time different? Why has the Bitcoin price appreciated so much? And, is it going to stay at these levels? There's been, I think, so many different accelerants for Bitcoin essentially in the past 12 months that it's not one thing, but really it's the building of the past 3 years, 4 years of infrastructure that the community has been building. It's getting a diversified group of investors, not just, retail or institutions, but now we have public companies like Square and MicroStrategy buying Bitcoin. We have, Paul Tudor Jones going out and saying that he's a Bitcoin bull. And so I think we're kind of moving past that phase where it's, concentrated in a particular persona or type of investor and really broadening horizons.
Yeah, it feels like we are, Kinjal, would you say we're like past that phase of, well, it could go to zero. There was always that talking point, well, it could go to zero. And now I'm looking at it and I'm like, well, yeah, the US dollar could go to zero as well. That's about how unlikely it is. Maybe a little bit more likely than the US dollar going to zero. And that feels great. I think that's a huge milestone. This has been the first year where I've really felt emboldened to say that to family and friends, like, well, you could lose all your money. Well, I mean, you could lose all your money, of course, if you need to sell out, and the price has gone down below from where you bought. But no, like we're not going to zero anytime soon. There's too much interest at this point in the market.
Yeah, and I mean, they say, Bitcoin is a lot less risky at 40K than it is at 4K for most institutional investors, right? They might have missed out on that upside, but it's way less risky for them to get involved today. So
absolutely,
yeah, I totally agree.
Absolutely.
Let me keep going here. So, I think I kind of touched on all of these sort of individual pieces, but we're going to kind of move into increased financialization of Bitcoin markets that we've already started to see with, derivatives. But I think this is going to continue to grow and build in 2021. And I'm really excited about what this looks like, and I think it's not slowing down by any means.
Yeah.
So maybe I'll pause here. So I think there's like a lot of conversation around is this DeFi bull run different than what happened in 2017? And, I think we at Blockchain Capital, we really are excited by all the real products that have been launched and all the traction that the community has gained. Like we think this is absolutely different than 2017, where in the ICO era, a lot of the raises were ICOs that were raising on an idea without an actual product live. And so that model wasn't proven out, versus today we have all these DeFi protocols validating this idea of being able to bootstrap a community on Ethereum and then launch these tokens that provide value to the end user. And they actually have more traditional value capture mechanisms that we just weren't seeing back in the day. Of course, we still have a lot of utility type tokens and governance tokens, but on the whole, I would say there's a lot more defined value creation and capture mechanisms today.
Yeah, I think that's that is a talking point that I try to bring to, investors when I'm talking with them. I mean, it's the fact that we're not talking about ideas from an ivory tower anymore, which was exactly the problem in 2017. There was just so much promise, and there's actually quite a bit of promise there that has come to light now, and it's exciting to see that. But I always think about Chris Berniski talked about this. It was either 2017, 2018. He was just talking about the fact that he was talking about the J curves and in crypto, and relating it back to the fact that the cumulative utility value in 2017 of crypto, especially when we talk about what was already built on Ethereum, it was very little, but the discounted expected utility value was through the roof. Now that's been flipped. I find that I'm always amazed at the very intelligent people that are in the crypto space, maybe less focused on Ethereum, who don't realize everything that has changed. And again, like you look at the slide here and you think about like all the traction in terms of total value locked is a great vanity metric, but at the end of the day, looking at all of the wallets that are being tracked that have participated in DeFi. So anyways, well said. I think this is a nice comparison of 2017 to 2020.
Yeah, totally agreed on the traction numbers. We saw, of course, daily settlement values crossed briefly between Ethereum and Bitcoin. I think this just kind of, again, points to the usage and the economic activity that we're seeing, which is really exciting. And something that we point to a lot when we're talking to institutional investors of, how do we measure success in the space? I think a lot of these charts that talk about, daily settled value or TVL can be a little foreign sounding. And so trying to contextualize what does this growth actually mean is really helpful, I think.
Really?
This is, it's kind of crazy because we made this slide like 2 months ago and now we're at double this TVL.
Numbers go cool within about a week's time. It's awesome.
Yeah, exactly. Here's maybe another pausing point of just how we think about DeFi projects versus to the traditional fintech world. So, oftentimes when we're talking about fintech versus what we're building, it's very much a conversation of, hey, we're not just rebuilding financial infrastructure. That's not the goal, is to just copy and paste this, onto digital, onto public blockchains, but rather what does this bring to the table that's different? And so here's where we talk about how, these are running 24/7. This is open source, global liquidity. Protocols are agnostic to any particular jurisdiction, although, maybe that changes in the future, but compliance is really handled on a case-by-case basis on top of Ethereum, right? It's not so much that it changes per, where you live and how you engage with Ethereum, to a certain extent, at least. And just so that the users can own the services and actually capture value here. So just, I think, making this comparison to traditional fintech where everything is proprietary and closed and there's a extremely high compliance burden and corporations are really extracting the value. I think this kind of hits the nail on the head for more traditional finance folks when they're saying, like, why do we need DeFi? Well, flip the current model on its head and you get something that's just more bootstrapped and on the ground and really trying to, benefit the entire user base.
Yeah. I think that anyone in traditional finance would be very surprised to know that like Uniswap has a team of, I think the team is less than 20. I think it's like 11 or 12 maybe. And then you talk about the stats they have, like 3.1 billion in liquidity. Nearly they've been doing upwards of $1 billion in 24-hour volume. Now they did 838 million in the last 24 hours. Just like crazy numbers in startup land. Like I lived in Silicon Valley for some time, and I mean these would have been fantasy numbers to think about for any of the startups you would work with. But now, it's just so different because you're launching as a startup, but when you launch a protocol, you become a community, and now you can potentially have tens of thousands of people that are owning that network. So yeah, I love the comparison here. Kinjal, do you think that like Santiago from Parify was saying to me that like DeFi and finance will just be one, like the separation of the two in the long-term future, like we won't be talking about it, of course. Like DeFi can just become that underlying architecture. But until we get there, like I wonder, like, do you think that we'll start to just see more founders, jumping into DeFi, building on the blockchain, building on Ethereum, whatever, versus traditional fintech? Like, Robinhood's a remarkable story, but I wonder, like, do you see as many like entrepreneurs that will want to work without working with DeFi if they're going to be in the fintech space?
Yeah, no, I think it's a great question. I mean, I definitely think in the future, there's probably a world where the two become one, but I definitely think that we're a ways away from it, just given the massive shift that it would require. Because I think like what we baby steps, right? Like what we've seen in fintech over the past decade has like completely changed the way we work on the internet, right? Stripe itself has changed how payments work on the internet. So I think we have a long ways to go, but I would love to get to a point where the underlying infrastructure matters less, and what matters more is what it delivers to the end user and the user experience. And so from that perspective, I think DeFi is definitely going to come out on top. And there are tons of entrepreneurs coming into the space, and I think they're going to continue to come in. The ability for like a team like Uniswap to be able to scale to that extent with such a small, lean team, that's the beauty of the internet, right? That's literally us as using the internet infrastructure to be able to scale an idea across the community. So I think that it's going to continue to grow, but I think the merging of the two really depends on regulation and also this idea of, is it invisible to a certain extent to the end user?
Kinjal, I guess while we're on this slide, what do you find, what are institutional investors, high net worth individuals, what are they most interested in about DeFi? Like what's compelling about it? And then also I'd love to know, like, where are they skeptical?
Yeah, so in my conversations with institutional investors, I would say Bitcoin feels like it's definitely understood to a much more greater extent than we might have expected in the past couple of years. And Ethereum is a little bit like the Wild West. So folks are really excited about the traction numbers that we've seen on Ethereum, but I think it's more abstract, right? This idea of explaining DeFi is much more it's much more abstract in their minds because they're not, it's challenging to really understand it until you've played around and kind of been inside these protocols. So I would say what folks are most engaged and excited about is understanding the difference between doing lending on Aave or using Uniswap versus our traditional infrastructure and why that's better. Or with stablecoins, I get the question all the time of, we have PayPal, we have Venmo, like, why do we need a stablecoin? Is there any benefit that we get from using a digital tokenized dollar? So I think like understanding the core innovation there is what I get questions about the most. And then I think on the skepticism side, once someone gets a little bit deeper, there's a lot of questions around, well, if you can fork a protocol, then like, what is it worth? Or if how do you actually value these tokens? And can you do a DCF, or can you do some sort of traditional valuation model? Or, is there a world where a user is going to want to hold 50 tokens and in their wallet? Like today, we probably have a couple of credit cards and cash, and, that's kind of how we engage with money. And so where do you see the tokens kind of evolving in terms of folks holding many different tokens? So those are some of the questions that we get, and I think they're all valid, but we're getting answers for those as well.
Yeah, really valid questions. That is an interesting one about what happens once you can fork that. And it's funny because like I I would have trouble still answering that, but I could go down the usual route. We all are like, well, the community really matters, and if you don't have the community's backing, but then there's clear examples where that's not played out. Are there any other use cases that really stand out in DeFi? By the way, I'm mindful of the fact, I know you have some slides here on stable coins that we want to get to, but you called out lending. Curious, are they asking about options at all? Like insurance, like some of the more, some of the business models that are really well understood, that they could see being rebuilt with smart contracts?
I would say it's definitely early days. We usually get through in our conversations, like talking through decentralized exchanges and lending, but I think the derivatives world is a bit more niche. Just like the idea of being able to do that with DeFi, because it's such an institutional product today. So it's not so much that I think there's interest, but oftentimes I don't think it's the obvious first use case that folks are pointing to, at least in my experiences.
Before we talk about the next slide, because again, going back to the stable coins, which is a hot topic. Gosh, there was one other thing there. ETH2 staking. While we're talking about high net worth individuals and institutional investors, what are folks asking about in terms of ETH2 staking? Do they understand how much has been locked up? Is that bullish for ETH as a store of value? What sort of questions are you getting?
Yeah, so definitely get some questions around ETH2 staking, much more high level in terms of, I think it's more about what are the implications of ETH2 shifting over to, or ETH shifting over to ETH2, and then how do we as a firm plan on staking in Ethereum, and like what does it actually look like? What does it mean to stake? What do you get from staking? I think those are some of the more questions that I'm getting, is like, what are the implications of this, rather than more advanced. I'd say we're still early days in kind of calling out more nuanced questions around ETH2 staking. But what folks definitely seem to start to get excited by is just how that can secure the network, what the implications are for having your assets be staked, and understanding that these are not static assets that you just kind of hold and then never kind of touch. This is very participatory, not just Ethereum, but all the DeFi protocols. So that notion people are getting more comfortable with, but I'd say very early days on ETH2 from the institutional side.
Awesome. Have you ever seen a institutional investor using Zapper? I'd be curious when they start to use that. I've run into actually quite a few lately, and I was like, oh, that's cool. Like you report to your investors using Zapper. Like that's really
awesome.
Yeah, I never foresaw that coming, but there's definitely a number of, especially the DeFi focused funds like you all like at Blockchain Capital. But sorry, Kinjal, we can keep going with the report here.
Yeah,
I know there's quite a bit there.
All right, let me jump to stable coins. Even my stable coin chart is now out of date. Things are just moving a mile a minute. But yeah, so on the stablecoin side, I think we are really, and I personally, I'm just really excited by the sort of potential for stablecoins to on-ramp to sort of bring new everyday users to crypto. So everybody talks about how Bitcoin can be like the gateway drug to understanding the crypto asset world and just blockchain more broadly. I think stablecoins are going to increasingly be that, because they are much easier to, I think, wrap your head around. This is a dollar, it's digital, but hey, it unlocks all these cool platforms, right? We had so many integrations in the past couple of years, whether it's on the DeFi side or more social platforms. The global supply has just skyrocketed. So I'm really excited about what that means for new merchants being able to integrate with stablecoins and then have that touch the end user.
Yeah. Yeah. The liquidity of stable coins has been insane to watch the last year. And it's something that newcomers will never really appreciate, but we can all remember like using Litecoin at one point to, circumvent doing, let's say, like a Bitcoin transfer. If you wanted to move value around at the time, especially 2017 and like early 2018, I mean, Litecoin was it. It made a lot of sense. It was cheap and easy and quick. But now stable coins have become the standard. And, for all of us, in places like the United States, I always feel lucky. Like I don't need exposure to the US dollar, but the fact that I can earn interest on it, the fact that anyone else in the world who can maybe get their hands on an Ethereum wallet like Argent, suddenly they have exposure to the US dollar, which can be life changing. It's something that I'll say, I'm in a privileged place to be able to overlook that in my own life, but I've just really begun to like understand, like, again, how life changing that can be for others. We had Akin Sawyer who talked to us a lot about Nigeria, and then we've had quite a few guests who have talked to us about Argentina. So that's the goal, right? That's where we're headed. That's the point of this. It's not to become a money playground for a bunch of rich kids. It's meant to be truly to bank the unbanked, whether it's DeFi or whether it's Bitcoin or any other blockchain in the future. So Kim, I want to be mindful of your time too. Like, is there anything else in the report that you think folks should really take note of? And we'll be sure to share this, of course, after the show, because everyone should take a look at this.
Yeah, I guess the last thing, so just skipping down to the adoption section. So we like to run a survey every 18 months here at Blockchain Capital. And the survey is usually focused on Bitcoin, but it really asks questions around folks learning about Bitcoin, what their conviction levels are, and so on. And we got the results back in the fall of last year and could kind of compare it to what we'd been asking folks. So we kind of asked the same questions as the previous few times. So I just found one particular stat really interesting. So, perception and awareness is high. I think it says it's somewhere around 90% of folks know or have heard of Bitcoin. But I thought this was really interesting, where 38% of folks expected Bitcoin to exist longer than the euro. That to me is just kind of mind blowing. And, granted, this was a survey that we did across US adults. So this isn't a European population, but just the notion in your mind where, you have enough conviction in Bitcoin to say this is going to be around much longer than the euro is, I think, kind of shocking, and just speaks volumes to how quickly this has become not a if, but like a when sort of idea in folks' mind.
Kinjal, while we're on this this topic of perception of Bitcoin, what about tokenized Bitcoin on Ethereum? I think I'm like trying to pull up like what's the most current number. I can't remember. Is there anything in the report about that, or any insights you'd like to share on I think it was like 140x growth year over year. We went from like 1,100 Bitcoins to I think it was around 140,000 Bitcoins that had been tokenized on Ethereum. But what does that mean moving forward?
Yeah, I don't know if we included the chart in the report, but yeah, the growth was astonishing to see. I think it really just speaks to the fact that people want to be able to use DeFi projects with Bitcoin, right? Bitcoin is effectively the reserve asset in the space, and to be able to do things with their Bitcoin is increasingly in demand. And I think that speaks to also people's holdings and what they do with their assets. In terms of, so this is it's great. It's crazy the growth that we just saw in the past year and the ability for folks to use it. It's definitely a challenge when we think about what are the implications for some of these, custodial solutions, and what does it mean to really have Bitcoin on Ethereum from a security perspective, and I think there's a camp of folks who would be like, we're not touching our Bitcoin to do anything.
Yeah.
And then another camp who's like, no, we want to like be able to put this to work in DeFi. So
Yeah.
that really comes down to investor philosophy. But I think the markets have heard, right? There's clearly demand for this.
Yeah. There's a spectrum of conversations that I've had where it's there's the hodling mentality. Then there's, hold on, if I'm holding it, I can put it to work. And for those, especially like I've talked to a lot of folks who they're not into DeFi yet, but they're like, okay, if I'm going to hold Bitcoin, can I lend it? Yeah, you can use custodial lending. Try BlockFi, try Celsius. But then moving over to DeFi, they're like, okay, well, what's the difference? And I'm like, okay, well, are we ready to self-custody? Are we ready to assume the risk of using these protocols, which come with smart contract risk, and there's a boatload of other risks. But by the way, like there are higher returns in many cases. It's just the usual conversation, like what's your risk tolerance, and can we onboard you onto using one of these Web3 wallets? But anything else that you think folks are missing the boat on? It's 2021. Again, I feel very lucky. We're living through an exciting time. I mean, we've got the crypto markets in general, namely, I would say Bitcoin and Ethereum, and then what's happened with DeFi. It's been insane to watch over the past year. And I guess like what do you recommend folks like look into? Like what's maybe some resources to learn more, or even some trends to pay closer attention to?
Yeah, absolutely. So, I think one trend that everybody has been, well, not everybody, I feel like this speaks to my Twitter feed, but a lot of folks in my Twitter feed have been talking about is social tokens and NFTs and the growth in that space. I think it's a category that has its ups and downs, right? Everybody remembers CryptoKitties and that conversation back in the day, but a couple of things feel different this time. The first is just, I think that there's a lot more grassroots community development that's happened over the past 12 months around crypto art and around crypto NFTs, and there's a lot of infrastructure to support it. And then the second is that I think the conversation has changed from let's issue a token to represent this collectible to let's issue a token to allow people to do programmable activities and engage a community. And like, what can we do with programmable, tokens that could incentivize a community to hold that token, to use it, to spend it for a particular artist or musician or whoever it may be. So yeah, I like that idea of taking tokens to enable users to become owners of that community and like actually seeing that come to life. And we've seen so much infrastructure over the past year, whether it's, Roll or Rally or, Rarible. There's so many platforms out there that are enabling this right now. So that's an area that I'm paying attention to, particularly wanting to talk more to users and say, hey, like you came into this space from a different angle. This is more social. What do you like about it? What do you not like about it? Is this a way that we could onboard the normies of the world who would say this is a really fun way to just engage with the space?
Yeah. Well said. Gosh, we didn't cover that, but I'm glad you were able to touch on that. Creator tokens, social tokens, even Audius is a really interesting example. I remember like a year ago, I was like, wait a sec, you have how many users? Like that's insane. And then they launched their token and they gifted it to all the folks that helped to bootstrap the network. And it's a cool thing. It's like, imagine if SoundCloud could have like rewarded everyone. That's essentially what Audius did. Or, I've tried to explain to friends and family with Facebook. Imagine if a few years into Facebook, they rewarded all their users. They said, here's stock. We're going public and you're all getting a piece of it. That's what we're seeing. It's almost like a customer acquisition cost. You're rewarding those that support you early, except it no longer requires that you be an accredited investor and have to put forth a ton of capital. It could just be time, effort, energy spent on the platform. But Kinjal, just thanks so much. This is awesome. We would love to have you back. Just so much to learn from, and really appreciate like all the insights you're able to share with us. And I want to remind everyone, you can follow Kinjal here on Twitter. Kinjal, you also have a newsletter I thought I saw, right? What's the name of it?
It's called 2 Cents. I pretty much talk about crypto product, design, user experience. Yeah, a lot of fun stuff coming this year. I think it's on my Twitter page as well. Thanks so much for having me.
Yeah, we'll have to have another conversation with you on that. I remember we were going back and forth on that. That's a really interesting topic to dig into that I feel like we don't cover enough. So would love to learn more from you on that. But yeah, everyone, just a reminder, subscribe at tv.zapper.fi. Don't forget to track all your DeFi portfolio on-chain, including Bitcoin. You can track on-chain at zapper.fi. And we will be back on Monday with a new show. And so, yeah, just thanks so much for tuning in. Kinjal, I'm going to literally just hit an outro video and then we'll be off air. So if you have any questions, I'll meet you there. So yeah, thanks so much, everyone. Have a great day and have a safe weekend. Bye.
Thanks, everyone.